Hi, I'm Emmanuel Sheriff, a multi-asset portfolio manager here at PIMCO and lead PM for the PIMCO Balanced Income and Growth, or PBIG strategy. Amid elevated macro and market uncertainty, investors are looking for a strategy that can help withstand shocks while delivering steady, reliable returns. PIMCO's Balanced Income and Growth, an all-weather global 60/40 stock bond strategy that combines PIMCO's fixed income expertise with quantitative stock selection, could be the solution you're looking for. In today's uncertain world, we believe a disciplined, stable 60/40 strategy can help investors stay the course. Combining global equities and fixed income can provide balance and resilience through challenging times. Allocating broadly across regions, not just the US, provides diversification benefits that support steady income and long-term total return. It's a sensible approach given the increasing gaps between economies and markets. When markets get volatile, emotions often take over. Investors tend to sell out of fear when markets fall and buy out of excitement when markets rise. Markets ultimately do normalize, and those who try to time their moves often end up worse off than those who stay invested. For investors seeking to avoid the pitfalls of market timing, a portfolio comprising 60% global equities and 40% multi-sector bonds has proven to strike an attractive balance of risk and return over the long term, with no market timing needed. In fact, since 1990, this 60/40 mix has delivered returns nearly as strong as solely investing in global stocks, but with around 37% less volatility. PIMCO Balanced Income and Growth is a 60/40 strategy that offers a robust framework to counteract behavioral biases, navigate uncertainty, and achieve long-term success. PBIG is an active, globally diversified strategy designed to be a core investment solution for all market environments. It offers stable long-term allocation that can help investors avoid the risks of timing the market. By investing in a balanced mix of 60% stocks and 40% bonds, the strategy seeks to optimize risk and reward. It aims to deliver the consistent, attractive income investors know and trust PIMCO for through bonds, along with long-term capital growth through equities at a moderate risk level. But what truly sets PIMCO apart from other balanced solutions are three key features: systematic equity investments, multi-sector fixed income, and macro-driven tactical adjustments. Let's look at them one by one. PBIG's systematic equities approach uses a disciplined, unemotional stock investment process that provides global diversification. This helps limit the risk in any single country, sector, or stock exposed to higher tariffs or market volatility. Other offerings tend to focus their stock picks on a specific style, sector, or country, which can lead to less consistent returns and greater concentration risk. On the fixed income side, PBIG's flexible multi-sector approach taps into PIMCO's global resources to invest across the vast global bond market, focusing on high-quality, diversified income sources. This helps manage risk and pursue stable income and returns, even in challenging economic environments. In contrast, some strategies lean heavier into riskier bond sectors, such as corporate high yield, which often move closely with equity markets. Finally, PBIG uses macro-driven tactical adjustments to make modest tweaks to its equity, duration, credit, and currency exposures based on PIMCO's economic outlook. This flexibility helps the portfolio respond to market disruptions like rising inflation or slower GDP growth. PIMCO's edge in systematic investing comes from using extensive data and a disciplined, unemotional approach to building portfolios. Advanced quantitative techniques help us identify the most robust opportunities in the global stock market. We analyze thousands of data points across nearly 3,000 companies worldwide and have designed numerous innovative signals that others might overlook. These are combined with traditional metrics like price to cash flow to drive stock selection. In fact, more than half the signals we use are developed in-house by PIMCO's quantitative equity research team. We group these signals into four key themes: quality, value, momentum, and growth, each tied to long-term return potential. From there, we create a single score that reflects a company's overall attractiveness, helping us select the most well-rounded companies with strong future return prospects for the portfolio. In uncertain times, PBIG's global exposure to multiple equity factors can harness repeatable alpha sources and structural market inefficiencies, offering a smoother, more consistent return profile. PBIG's bond allocation uses a similar approach as PIMCO's flagship income strategy in that it does not rely on any one bond sector or industry to generate returns. Instead, it leverages PIMCO's global resources to invest across the $151 trillion global bond market. The strategy flexibly invests in a mix of higher-yielding assets such as securitized bonds, which tend to perform well during periods of robust economic growth, along with higher-quality assets like U.S. government bonds, which typically provide stability when growth slows. PIMCO's multi-sector approach adds value to PBIG by diversifying exposure across different economic conditions, helping to balance performance. Its focus on yield reduces the need for market timing, as consistent income can offset short-term volatility. Broad flexibility enables tactical adjustments to capture opportunities while prioritizing senior secured bonds to manage downside risk. Looking ahead, we expect ongoing economic uncertainty, geopolitical risk, and more volatile business cycles. We believe global growth will disappoint over the next 5 years, with investment returns varying more across asset classes and regions. Against this backdrop, PBIG's active, high-quality, and global approach positions it well for a broad set of macroeconomic and market outcomes.